Hey traders, what's happening? Jamie Setley here, and today we are going to look at Aussie yen for a while. This is actually a gold chart here, which is also pretty interesting, but we are going to focus on Aussie yen for today. All right, so, and I brought up the wrong chart. That's a longer term chart, which we will look at next. Okay, so we're going to start with this 4-hour chart, which look at the 200 period average on the 4-hour chart. It's just incredible. So, I mean, it's literally the market's been riding, or this cross has been riding this average with like precision essentially all year. So, like, we broke down in January, came back, tested it. The world fell apart. Okay, fine. Got back above it. Just about tagged it here in May. The world was awesome again. Again, this is essentially a pure risk barometer, I think, for across markets. But since then, really since June, we've treaded sideways. So it's like, which way do we resolve here? At this point, after today, I lean towards the downside. So again, we rode that average throughout July, August, September, came off. Right after that, a kind of 11% sell-off in the S&P or NASDAQ. I believe NASDAQ was down 11, maybe the S&P was down a little bit less from its high. Equity markets are back near their highs, and we've got a warning sign here from Aussie yen after it failed at, guess what, the 200 period average on the 4-hour chart. Okay, so that tells me I'm going to trade from the short side, right? Risk is pretty tight here. So what you've got, this is an hourly chart now. I will be looking for or thinking that resistance is probably around the 75-70 region. At least that would be an initial spot to pay attention to, right? You can see here over the last couple of weeks, that level's been a near-term pivot of sorts. So I would watch there. Beyond that, if you did take out this little high from today, essentially, I think you're looking at resistance near 76.10, which again, you've got a low here, resistance around that level as well. So those are two spots to pay attention to. Basically, 75.70, 76.10. The high here from last week, I guess that's Friday, I'd be looking at as a stop out point for Aussie yen, which is going to be, call it 76.60 or so. Give yourself a little bit of room. All right. Let's go to the weekly chart now, because here is where I think it gets really interesting. All right, so here's the weekly chart, and we have a very long-term channel here, actually, but we actually did not quite reach that upper channel line. But what I thought was interesting is the importance of, this is a daily chart. Let's go weekly, just make it real simple. So, all right. The high here from December of 2019, right? We tested it in June. We tested it in July. We traded around it in August. We finally broke out, right? Well, that breakout's failed. And we dropped back below it. We came back and we tested the exact same level. So, what was once resistance has become resistance again. So again, you're trading around kind of the decision point, trading around the edge of the market, which I like to do, because your risk to reward is massive at that point. This method or this way or this philosophy will lead you to take a lot of small losses, but that's okay. It's not for everybody. I get it. Some people just want to be right all the time. If that's the case, you're probably in the wrong business. Anyway, so yeah, liking it lower again above last Friday's high. Thinking big here, failed breakout, you tend to get moves pretty quick in the other direction. So we came back, tested it. Let's see if we can, target some bigger spots here. Generally speaking, 72, 72.50 is a spot that's 2 legs down from the high. And then 72.50 is going to be that low from early June. And that's actually, if you were to look at this from an Elliott standpoint, that would be your former fourth wave low anyway. So that is kind of a natural spot to expect a reaction. The next level gets a little big. So That next level we're talking about essentially 69-ish, right, just above. And that would be, excuse me, that would be this 50% retrace of the rally from the March low, and then where the legs here from the top would subdivide into 1.618. In other words, the legs from here would be 1.618. So let's just say if we do have, a 1, 2, 3, 4, 5 up from that March low in risk, which I actually think is the case, then you're expecting an ABC down, right? The two spots to pay attention to are the two equal legs and the 1618, right? In other words, C either equals A or C equals 1.618 of A. And those are your two levels to pay attention to. And they also coincide with other measurement techniques or pattern techniques. Again, Elliott fourth wave low, and then 50% retrace. 50% retrace is not a retrace I pay attention to a ton, but given the extreme kind of, issue down at the low where you had that massive, massive decline very quickly and that V bottom, that it would make me actually want to pay attention to the 50% trace, maybe a little more than say the 618, right? Maybe you're not going to get all the way to the 618. Like how real is this wick is what I'm getting at, if that makes any sense. Okay, so that's that. Again, to summarize, failed breakout in Aussie yen, came back, hit resistance where you think resistance should have been anyway. Bigger downside potential towards well-defined levels. Short-term resistance 75.70 and 76.10, and that's a wrap. So again, interesting idea here with Aussie yen on the short side, and take care and good luck. All right, bye.